What's going on, everybody? Hope you all had a great weekend. I tell you what, going into the weekend, though, Intel, terrible earnings. Is that a sign for a lot of those other names in that chip space? I guess we'll have to wait and see. But we do have some other chip earnings coming up, so we'll see what ends up happening with some of those. Ford is feeling the pressure a little bit. We heard a little while ago or a couple of weeks ago how Tesla cut prices on some of their cars, and it just sent shockwaves through the whole industry. And now Ford is having to grapple with the same thing. We'll talk a little bit about that. And Baidu is the next company now looking at a ChatGPT like add-on to help improve their services. We'll discuss that a little bit. In the meantime, welcome to the most dangerous show on the Tasty Live Network. It's Engineering to Trade. I'm Jamal Chandler. Great weekend, very busy in some way, shape, or form. Just, gosh. Well, obviously, I wasn't here on Friday. For those of you who follow the show, I ended up missing Friday. I was out. I went and did a college tour. Was hanging out with my daughter. It was pretty cool. You know, it's always cool to get some time in with one-on-one time in with your kids. And so we went to Butler University in Indianapolis, Indiana, small school, like those schools that are like mid-majors, you know what I mean? It's like under 5,000 students. Actually, the size of the school is pretty equivalent to the high school that she's at now. So I don't think there was any fear there, you know? And it was cool, you know, walk around campus. You know, it's kind of fun. I did a long stint in college. Some of you may have heard me talk about this before, but I mean, I did undergrad and I did 5 years. The fifth year was kind of just for fun. I really didn't have many classes either of the 2 semesters. And I went straight to grad school after that. I did a master's in 2.5 years. Actually ended up staying on. I was working on a PhD. So I was basically in school till, well, pretty much 30 years old, which is a long time. And when you do school for that long, you kind of get the college system down. So I'm just breaking down all these different things to her and talking to her about what you should pay attention to and look for. And it was just cool, man. It was a fun time. They got a nice little program, too. She's interested in health sciences. They got a cool health sciences program. The lady who helped start their program, she gave a real spirited talk. It was interesting. And she pulled no punches. But the cool thing about them is they talk about the fact that they basically have all these hookups for jobs. And right there in Indiana, in Indianapolis, basically, and which is really what you want to hear, right? Nobody wants to go to school and then come out without a job. That sucks. I mean, honestly, that's the reason why I ended up reluctantly working on a PhD. I didn't get a job after my master's, and that was the next thing to do, just stay in school for longer. So if you want to get a job right away, that's exactly the kind of thing you want to hear coming out of a school. Anyway, that was most of the weekend. Or I should say part of the weekend, did that. I told you guys I'm still coaching 2 basketball teams right now. One of them, we lost a really close game to what's considered the best team in the league. And it was a 2-point game. That was tough to deal with. But we moved through it. We're moving through it. And then we had another game where my youngest dude just completely crushed it. He had almost like a double-double in boards and rebounds. He's balling, man. He's doing his thing. He's a big kid, though. Eventually the kids will catch up with him. I keep telling him that. Don't get used to this now. So, aside from all that, what's going on in these markets, man? Well, like we said, Intel had earnings on Friday, and we're in the middle of a big earnings cycle coming up, and I got some charts on that in a little bit. But Intel's earnings were horrible. So let's talk about some of the stuff that we've seen. Let's look at the slides. Let's pull up some slides. Intel's earnings, they basically said that they have a glut of inventory, ton of chips out there, and a lot of their suppliers. And they don't expect their suppliers are going to be buying a lot of chips. So what does that mean for the whole entire industry? It's kind of makes sense, right? We had 2 years of just explosion and growth in that whole space. Intel stock, which seemed like it was left for dead, that stock was trading like $60 or something dollars, right? I feel $60, $70. And now it's back down. It's just below 30. And you wonder, let's see, where was the stock? I got to remember. I feel like it was trading close to $70, yeah, and sometime during 2020. And since then, it's really fallen off. And now you have this situation after 2 years, chips, PCs and servers are, the people aren't buying those as much. The work from home thing is really kind of in the middle of a shift. And so is this going to be the situation with chip stocks overall? We got NXPI that has earnings tonight. I don't know. I'd be looking to get short that thing a little bit just based off of that. If the bellwether of the industry, which it still kind of is, Intel, is saying that there's an issue, I would imagine other stocks are going to have the same issues. That one and NVIDIA, which I just so happen to be short deltas as well. So that's kind of my feeling on it. This is just what I think. I don't know. You tell me if I'm wrong. Ford. They're feeling the pinch, like we said. I remember we talked about this for those who might have seen the show, we talked about the idea of how Tesla has really cut a lot of prices, right? This was a big news story a couple of weeks ago. They cut a lot of prices across the whole fleet of their cars. And that has clearly had reverberations across the whole EV industry. Now Ford had to slash prices on its electric Mustang in response to the Tesla cuts. And you wonder if this is the beginning of just sort of a price war overall. We already know what's going on with cars and used cars, although you wouldn't know it by looking at Carvana's stock price, but whatever. That's a short squeeze. Overall, with cars and used cars right now, it's really a higher inventory situation, and that's why these guys are cutting prices. And so you start to feel like this is maybe the beginning of a trend that we're going to be seeing for a little bit. Got to stay tuned. Baidu is going to launch an AI chat bot similar to ChatGPT. It's not ChatGPT, similar. Of course, they're not doing ChatGPT because I'm guessing OpenAI is a U.S. company. China's not going to use a U.S. company in their Google. Basically, Baidu is like their Google. They're not going to use an American company in their Google, but they'll use something that they'll create like that. But I guess this underscores the idea of, is Google eventually going to use ChatGPT? Are they heading down that line? Because that's really their big threat, right? Everybody's been saying that's the big threat to Google is ChatGPT. I think we tend to overblow things before we, I think we really do kind of overblow fears before things really materialize. It's not. I don't think ChatGPT is going to take out Google completely, but it's clearly an interesting tool. I'm sure it has its faults, which we're eventually all hear about. But as you guys know, I have my ChatGPT trade on the ARB trade I have. I don't really want to call it ARB trade, but I'm going to call it ARB trade just because that sounds cooler. I'm long Microsoft Deltas. I'm short Deltas and NVIDIA just because we'll see how those pan out. It's my trade. In the meantime, some leftovers. Streaming is taking a step back with the Oscars. Let's move to the next slide. For those of you who happen to be watching the show on the Tasty Live webpage or the Tasty Live app, come watch the Tasty Live YouTube page. Get in there and talk to my people on the chat. Guys, in the chat, say what's up. Speak out. Type in characters. I don't care what you put in there. Go put something in the chat because it's dope. It's cool. And we always have a poll for you guys. Right now, at 40.37 in the SPX, this was done a little earlier in the day, but this market's still kind of been trending downward. At 40.37 in the SPX, currently, the SPX is 16% below the Jan 2022 high and 16% above that October 2022 low. So what will happen first? New high above that 48.19 or a new low below 34.92? I want to hear from you guys and see what you think. Back to leftovers here. So Netflix Oscar nominations, they've declined for the second straight year. And it speaks to a trend, right? They had 35 nominations in 2021. You can see they started to ramp up over years. Really what this is getting at is the fight between streaming and movies in the theaters, right? There's a long-term relationship with movies in the theaters and the studios that used to be in Hollywood, and obviously they used to push their movies to theaters, and Netflix and Apple and recently Amazon and all these other places are starting to sort of infiltrate that whole area, right? I mean, it's kind of ripe for a reset and ripe for change. And so we've seen now that this is starting to affect this whole industry. And it's interesting to see that their nominations are going down. So it's almost like it's in cahoots in a way. You know what I'm saying? Like, it's interesting. I mean, they had 27 in 2022 as we came out of the pandemic, and now it's 2023 and they only have 16. And so you're starting to feel as though there's a sort of shift happening away from nominating titles that are on streaming and trying to get more titles back in movie theaters. I feel like Top Gun and Avatar and those type of movies are sort of leading the way in a lot of these Oscar nominations this year. Top Gun's not even an Oscar type movie, is it? But anyway, it's because it was in the movie theaters. So now it's almost like if you're in the movie theaters, you have a better chance of getting Oscar nominated. Oscar nominations leads to a lot more things. Your actors are going to want to be more in movies that are Oscar nominated. It's an interesting dynamic. And basically Netflix is getting the shaft, right? So something interesting just to note. I don't think this really affects the stock price. I'm not sure. Maybe a little bit. But I mean, people are still going to watch Netflix. I know I am, right? I mean, most of the movies that I've gone to in the past year and a half usually have been because we went to show movies for our little kid, our 10-year-old. I mean, most of those are the main reasons why I've gone to the movies. I don't know the last time I went to a movie to see something that I wanted to see. We talk about different movies that we want to see. My wife wanted to see that Whitney Houston biopic, but we didn't go to the movies. I mean, there's no rush. We don't care. And you have so many things to watch, whether it's on, Netflix or whatever else in the meantime, before that thing you want to see in the movies comes to Netflix or HBO Max or whatever. You just wait. You just wait it out. I digress. Let's move to the next slide. You get the point. You know what I'm talking about. So big week, man. We got a big week coming up here. And I tell you, the one thing, the first domino to fall is this Fed meeting, right? We got to get through it and kind of have an idea what's going to happen. It's basically priced in for 25 basis points. As a matter of fact, ECB has rate decision and BOE have rate decisions the day after Fed, and they're both priced for about a 50 basis point rate hike. So that part seems to be solid. I guess the rhetoric that the Fed is going to, whatever they have to say after the meeting, is the one thing that people are really looking for, especially this time around. Whether they're going to say, we're just going to stay here at 25, we're going to keep going higher, or we're eventually looking to cut. That would send the market like ape shit. I mean, seriously, it would go ape shit if they said they're going to cut sometime soon. I can tell you that right now, at the end of the year. That's the one thing that everybody's really looking for. And they're going to try and make that rhetoric come true too. You know what I mean? Well, they didn't say they were going to go higher, so that probably means they're going to cut. It's all that crap. Whatever, man. 25 basis point rate hike is coming up. So keep that in mind. And that's not going to change, right? And so now you're still starting to look for the next CD that you can put your money in, or obviously some people are looking at treasuries, but don't completely take your eye off of stocks, because I tell you what, it doesn't seem like it's over for stocks, right? Like, are we getting that? This is where the poll comes from. We're getting a new high, or we're going to get a new low? What happens first? I don't think the new low, but what the hell do I know? Let's move ahead to the next slide. This is an interesting chart. Just found this a little while ago. So this is looking at the idea of put skew. Now, for those of you who are unfamiliar with skew in the market, I'll explain it to you in an easy way that was explained to me a long time ago. In general, we have stock buyers in the market, right? People buy stocks. Yeah, we have people who sell stocks and short stocks, sure, but most people are stock buyers. There's two ways to hedge stock buying, right? Theoretically. One is both of them. I mean, stock is long deltas, right? No matter what, doesn't matter the stock. If you're buying stock, you're long deltas. There's two ways to get short deltas. There's multiple ways, but two simple ways. You either buy puts or you sell calls. Therein lies the idea of skew. Since most of the people in the market are buying puts to hedge their stock, that's why put volatility is higher. And since most people are selling calls through the idea of being since they're long stock, they're usually getting short delta through the idea of a covered call. That's why upside call deltas are typically lower, or I should say they get lower as you go up for the most part. And they're lower than there's a lower volatility to upside calls. It's if you will, because most people are selling those calls, right? So that's the idea of skew, selling calls and buying puts. And so how do those volatilities offset? What does it mean when you have that long volatility on the puts and your short volatility on those upside calls? What's the difference in that? And that idea gets to put skew. So this situation for XRT, the ones that we're seeing that are higher, like XRT is the highest. That means it has a lot of high put skew. The put vol is higher because usually this happens when stocks have really been on the move more recently, or they're expecting to fall more. The market is expecting them to fall. You know what I mean? So the implied volatility of those puts are higher. So as a result, we're seeing XRT having high put volatility right now, which means there's probably a decent amount of owners and puts in XRT. Same thing with XHB, same thing with XLY. That's retail, that's consumer discretionary, and that's home builders, right? So those are the areas right now where people are starting to feel, I don't know, there's two things that could happen. They could actually fall, or because there's so much put skew, it could be a situation for a little bit of an upside squeeze. One of the two. There's no in between. Sorry to tell you. That's just at least the way I look at it. But those are the three that are the highest right now. It'll be interesting to see if those three get any higher. But retail, home builders, and consumer discretionary. And as we know, those have been interesting, troublesome areas, right? Retail has a glut of inventory. At least they have. We'll see what the next quarter brings and what they say in these earnings. But retail's had a glut of inventory, and it's been a troublesome sector. Home builders has been a troublesome sector because of rising interest rates. And consumer discretionary has been a troublesome sector because of, well, it's the stuff that you want but not need. And so those are the things that sold off the most last year, had a rough year. So that's really kind of the story that lines up with these. After that, you see a couple of other ones we highlighted on here. Tech, you got HYG, which is the high yield ETF, and then you see where the S&P 500 is. So, and then you see gold and TLT. Totally makes sense for gold and TLT. There's probably a little more upside skew than anything in the two of those. And so it's just kind of an interesting look at where people are feeling about some areas of the market. Higher implied put volatility on retail and home builders and consumer discretionary, and lower put volatility on TLT and GLD, which is kind of where we are in the market. TLT and GLD, of course, are two of the areas that people are looking for upside too. Gold is nearing, the actual gold commodity is nearing 2,000, and TLT, of course, is 20-year bonds, and 20-year bonds have been on. Well, it's been one of the things that people have been looking to buy in this year of bonds potentially making a return. That's all I got. Let's move to the next slide. Earnings, man, we got a lot. You see what's already happened, the early reporters, and we had week 1 and we had week 2. Now we got week 3, which basically about 35% of the S&P 500 is going to be reporting earnings. So this is a huge week where we got right here. After that, kind of trails off a little bit, 10%, 6%, 7%. But it's always, it's interesting. After this week, you sort of feel like, oh, okay, earnings are done. And then you still have a decent amount. They just kind of like pop up in bunches on like a Wednesday, Thursday. You have a bunch here and there, but week 4, week 5, week 6 are still a decent amount of earnings time periods. So basically by the end of February, most of the earnings will be kind of done. And then we'll just be looking, I don't know, at March, and there'll be a lot of trading happening, but it'll be sort of an end of the quarter type of deal, But February is always kind of a busy month, and this is the busiest week of February for sure. This is lining up to be possibly one of the busier times of the year. We'll see. Let's move ahead to the next slide. So, what are you looking at for tonight? I'm going to look at a couple. I'm not sure. I'm interested in a couple of these. McDonald's, NXPI, we talked about that with chips already. Whirlpool's another one. It's consumer appliances, and it's retail consumer appliances for the most part, right? I'm interested to know what happened with Electrolux. Electrolux is basically the European counterpart for Whirlpool. So I wonder, they usually have their earnings before Whirlpool. They might have had them in the last couple of days. That'll be an interesting one to look and see. I always look and see what comparable names did in the industry. Sometimes you can get an idea of maybe what direction one of these might go. And if they have cheap enough options in the front, then maybe you can just sort of do a quick premium play. I don't feel like many of these are sale because implied volatility is generally low in the market. So I'm not necessarily looking at possible sales. I might be looking at possible, dare I say, near-term options to possibly buy just for direction. If they're cheap enough, if it's like $1, $2, you know what I mean? I'm willing to risk $100, $100 premium, $200 premium. Outside of that, I'll talk to you about some of the sales I put up recently. There's not too many though. But anyway, HP got Caterpillar. I'm looking at some of the big ones. I'm looking at McDonald's, Caterpillar, Exxon. I don't really care about GM and probably UPS. Those are some of the ones that I'm going to look at. Like we said, we got the FOMC rate decision coming up. On Wednesday, the meeting will conclude, starts tomorrow, concludes Wednesday, of course, and then we'll get the decision. And then an hour later, we get Powell's comments, and then maybe we get some market reaction or not. Who knows? ECB and BOE, they have rate decisions coming up on Thursday. So like we said, I think both are expecting about 50 basis point rate hikes, but we'll wait and see what they actually do. And then we got the non-farm payrolls coming up on Friday. Nuts, man. Big week. Number of S&P 500 stocks above the 50-day moving average, 351, about 70% of the issues. Let's take a look at the portfolio and see what's going on. A few minutes left here in the show. So I think where I last left off is part of what I was doing in my portfolio, which I tend to talk about from time to time. I had, wow, this Carvana, I am keeping an eye on this thing. It's really interesting to me. So the other day, I found something to sell. This was a name that just really kind of had gone nuts. I just happened to see it. It was one of the bigger names that had been moving recently, and it moved up pretty big, Wayfair. So 61 vol with no earnings. Well, it did have earnings, but still 61 vol. I thought it was pretty nice. I sold this 80 call for like $3 and change the other day, and I covered it back today, 33% gain. I will take that any day of the week. I think it was a quick hitter. One of the main reasons I took it back because I was literally just short an upside call. That's it. And that was like $1,500 in premium. And so not premium, sorry, $300 in premium, but $1,500 in buying power, I think, at the time when I put it on. So I decided to buy it back and close it out. I also did the same thing in Meta. So I actually had a short call spread position in Meta for the better part of 2 to 3 weeks. Wasn't working, as most tech stocks, along with Meta, had been running up. And so I was getting beat up on it. I actually closed it out maybe last Thursday. I can't remember. And I decided after the big move on Friday, why not sell some upside in here? And so I was able to sell this call for $3 and change. I don't remember exactly. You guys can look it up. It's all on the trader page. And that was another one to be able to get some premium out of. So I kind of like that trade. Let's see. What else have I done? That was pretty much it. I'm holding on to this one. I might close this out by the end of the day. I'll see. Where's my? I'm up 22%. I might close it. James Winter talking about low correlation between INTC and NXPI. Low correlation. Last 6 earnings, INTC down 5 of 6. NXPI up 6 of 6. Oh, you are. And a guy, probably, correlations work until they don't. It's a good point, though, right? Maybe because of that correlation, maybe it doesn't work. Michael S., what's up from Calgary? How you doing, man? Thanks for watching the show. Appreciate you. Evan, what's up, buddy? How you doing? Stu's going to fall off the cliff, and at the end of the day, it just might. H. Montero, those are a bunch of characters, and I love that you put those in there. And they're all very interesting. One of them looks like the Hulk. That's what's up, dude. That is what's up. My guy Mike, what's up, Mike? My brother from another mother, what's happening, man? when I heard you were in Indiana for a school visit, I figured you might have been at Purdue. Nah, we drove right by Purdue, man. Just kept it moving right on through. Right on through. No. I didn't know you went to, really? You went to Illinois? That's what's up, man. So my daughter actually found out she got into Illinois on Friday while we were down at, right as we were leaving the visit from Butler, which is really interesting. So, as far as everything else in the portfolio, let's see. So, of course, I'm sure you guys are savvy traders. You guys know what's going on. We talked about all the events for the week. Here's your good old SPY, February 1st. Look at these implied volatilities. Tomorrow, nothing. End of the month, nothing going on. Of course, here we go for the Fed meeting. 28, got 27 for Thursday, which is probably just still some of the in between the two. There might be some move, who knows? And of course, BOE and ECB are having their rate hikes. And then Friday's the non-farm payroll report. So there it is, right there in a nutshell. For Wednesday, what's that? $7 move. It's about a 1.8% move, right? If you're new to option trading, you should know how to do this. Take the straddle, at the money straddle of any product, honestly, and get an idea of what it's expected to move over that time period. So over the next 2 days, you're expected to get a move of $7 in either direction. And in this case, you can just break it down in percentage, you divide that by the strike, and it's 1.7% move, right? That it's expected. So, and of course, the volatility works in such a way that as you go further out, I mean, it's usually going to be, the straddle price might be bigger. I mean, of course, we could go out here right, at 401, we're going to get a bigger straddle price. And you could say, oh, okay, that's $14 over the next 18 days, but then you'd have to break it down per day, what percent is expected. In a way, it's kind of weird, right? Just trust me, these are easier to do for near-term type of options. This is what we always do for earnings, or you could do it on a macro thing like SPY for macro events that are expected to come up within a day or two. It's usually easy to figure it out that way. On the video put spread. So see, I mean, I basically have this on as a spread, right? Like I got the deltas and NVIDIA short, and I got the Microsoft Zebra that's long. And this is kind of like a spread that I have to keep on together. At this point, it's kind of married. Can't necessarily take off one without taking the other. I mean, I don't want to. I'm trying to understand. It's kind of an experiment in a way, you know? It's kind of an experiment. I've done a couple of speculative ads recently. You've probably seen. I did some BuzzFeed on that ChatGPT thing. I bought it for like $2.59. Whatever. It's just $259. I mean, it's not a crazy idea. Just decided to buy some and see where this story goes. I also got some SoFi. I feel like this should be a decent time period for SoFi, a bank like this that has those type of rates and this type of rate environment. So it's just a speculative play. Instead of buying stock on this one, I decided I wanted to buy in the money calls, basically further out, May and June. And it's basically the equivalent stock price of $6.84, $6.86, somewhere around there. So, yeah, those are a couple of speculative ads. We'll see where it was. I mean, you know, this is a 6-month chart, and I think the stock's only been around for 2 years, right? Something like that. It used to be double digits. Can it get back to like a 10 or something? I don't know. And I could get tired of it maybe sooner than that. But I don't know. It's just a play for the time being. Anyway, like I said, I'm interested in looking at some possibly maybe doing some speculative plays, and maybe a couple of these names, and McDonald's and Exxon is another, and I think where's one more I'm maybe looking at? Caterpillar. Well, it's 2 more: UPS, Exxon, McDonald's, and Caterpillar. I'll let you guys know if I end up pulling something. Now, like I said, it's going to be probably pretty speculative and maybe directional, because I think volatility is actually cheap enough in these, and I don't think it's really worth a sale. It's kind of where I am with it. You know what I mean? I think sometimes you just got to alter your trading style in certain trading environments, and I don't really feel comfortable selling anything in Exxon when it's 14. But if the options are cheap enough, maybe I look to do a buy. So, folks, that's all I got for you today. Thanks for watching the show. And as always, be smart, be patient, trade small, trade off. See you guys later.